First guest of the hour is a big one. Joining us right now is billionaire investor and well-followed stock picker Jeff Vinik. He's also owner of the Tampa Bay Lightning, and we're going to talk about Tampa itself in just a few minutes. But first, Jeff, we have to ask you about the markets over the past few days, how you've been thinking about it, and maybe what you've been doing about it.
Yeah, obviously it's a volatile time, and for good reason with the Omicron variant out there. I can't predict the short term. I can't predict exactly what's going to happen with this variant again, but I am optimistic that hopeful that the current the current vaccines provide some protection, at least based on what I'm reading, and if not, that these RNA vaccines have been incredible, and they'll hopefully get it out to us relatively quickly. And again, we've learned to adjust, so I don't see a significant economic hit due to it, although certain sectors like airlines do get hit. But when I look out longer term, let's say for the next 0 to 3, 0 to 5 years, I'm actually quite constructive on the financial markets. Let's talk about inflation. Transitory, not transitory. I mean, those are just words, and the market already has discounted a lot of what Jay Powell said yesterday. But when we look at inflation, I think two things are going on that's important. One, on the labor front, there are still 7 or 8, 9 million people out of the labor force. Now, all of them are not coming back in, but most of them are. It's my belief that the government has flooded so many people with money that some individuals have been able to, work on their own, become self-employed, and others are just slow to come back to the labor force. I do think we're going to see many millions of people rejoin the labor force over the next several months to several years, maybe 200,000-300,000 a month, and that's going to take the edge off the tightness in labor and labor inflation. Uber, on their last conference call, already talked about it's being a little bit easier to find drivers. On materials and on goods inflation, et cetera, even services inflation, services labor will help that, as I said, but on goods inflation, I think we're in one of the biggest pre-buying, buying ahead, stockpiling, got to get inventories panic that we've had in history, and we're right in the middle of it. And I think we are overproducing because we're producing not only for demand, which is strong, but inventories are replenishing on top of that. We're going to see the other side of that sometime in the next 3 months, 6 months, 12 months, 18 months. I see a significant manufacturing slowdown at some point over the next 24 months, which will take the edge off price pressures. So if I had to look out, I think the bond market understands this. That's why rates have stayed so low. If I had to look out over the next, 12 to 36 months, my guess is inflation is going to be 2.5% in that period of time. And I think that's going to be very friendly for the economy, for corporate profits, and for the financial markets. So I'm quite positive, looking out.
Jeff, though, does that mean that Jay Powell has been right about this? Does that mean that we've been debating, getting rid of this word transitory? Is it really transitory then after all?
I don't know what, we could all try to define transitory. I think what it means is perhaps on a long-term basis, we are moving from really low inflation of, 1 to 2%, maybe to a 2 to 3% range over the next 5 years, and then they may be a little higher after that. So I think there might be a slow turn going on. Think about the Kondratiev wave, which I won't spend time going into, but I think we are at a turn there. But how you want to, what you want to call it, I don't think is as relevant as the fact that there are upward pressures on inflation right now, like materials, commodities, energy, labor, that I think are going to become less intense over the next 24 months and give us a nice respite and a period of calm, which will be great for the economy.
But let me ask you about the respite part. If we actually replenish inventories, but effectively over replenish, that could create its own slowdown too on the other side.
Yeah, no, and I see that. I see a manufacturing slowdown. In theory, you could even have a manufacturing recession on the other side. I'm not necessarily predicting that. Consumer has never been in better shape, so I do not see a recession in the overall economy in the U.S. or the world economy. But I see a period of, again, moderate inflation that's manageable and acceptable, and moderate economic growth, maybe 2 to 3% real growth in the later parts of 22, 23, 24. It's potentially Goldilocks.